Three companies you've never directly paid have more control over your financial life than your bank, your employer, or even the government. They decide if you can buy a house, rent an apartment, get a job, or even turn on electricity. They collect data on every financial move you make without your explicit permission. They sell your information for profit. They make mistakes constantly, and you pay the price. Your credit score isn't a measure of financial responsibility. It's a product sold by a private cartel that profits from controlling access to the American dream. Welcome to the credit score scam. Hi, everyone. Today we're exposing how three private corporations, Equifax, Experian, and TransUnion, built an unregulated monopoly that gatekeeps financial opportunity, profits from your data, and faces zero accountability when they destroy lives through errors. By the end, you'll understand why your credit score is less about you and more about their business model. You never signed up for a credit report. You never agreed to let Equifax track your purchases. You never gave TransUnion permission to sell your data. Yet these three companies maintain detailed files on over 200 million Americans, tracking every loan, credit card, payment, and debt for your entire adult life. This monopoly exists because of a simple historical accident. In the early 1900s, local merchants kept lists of customers who didn't pay debts. These lists merged into regional agencies, which eventually consolidated into three national bureaus. By the 1970s, Equifax, Experian, and TransUnion controlled the entire market, and no competitor has successfully challenged them since. They're not government agencies. They're for-profit corporations answerable to shareholders, not consumers. Yet, they wield power comparable to the IRS or Social Security Administration. The difference? Government agencies have oversight, accountability, and due process. Credit bureaus operate with minimal regulation while controlling access to fundamental aspects of American life. Credit bureaus generate approximately $4 billion annually, and not $1 comes from you directly, at least not until you need to fix their mistakes. Here's their business model. They collect your financial data for free, compile it into reports and scores, then sell that information to lenders, landlords, employers, insurers, and anyone else willing to pay. Every time you apply for a credit card, the lender pays $15, $30 to pull your report. Multiply that by billions of credit checks annually. When you apply for a mortgage, lenders pull reports from all three bureaus. That's $50, $100 per mortgage application. Landlords pay to screen tenants. Employers pay to check job candidates. Insurance companies pay to determine your rates. You're the product. Your financial behavior is the raw material. The credit bureaus package and sell it repeatedly without compensating you. They've monetized your responsibility, turning your bill payments into a commodity sold to the highest bidder. Your credit score, that three-digit number between 300 and 850, isn't created by the credit bureaus. It's calculated by FICO, a separate company that licenses scoring algorithms to lenders and bureaus. This creates another layer of corporate control over your financial life. FICO's algorithm is proprietary and secret. They provide general categories: payment history 35%, amounts owed 30%, length of credit history 15%, new credit 10%, credit mix 10%. But the actual calculations are hidden. You're judged by a black box algorithm that you can't examine, audit, or appeal. Even more frustrating, you don't have one credit score, you have dozens. FICO has multiple versions: FICO 8, FICO 9, industry-specific scores for auto loans and mortgages. Each credit bureau calculates scores slightly differently. The score you see on Credit Karma isn't the score your mortgage lender sees. You're chasing a moving target that changes depending on who's looking and why. The Federal Trade Commission study found that 1 in 5 Americans has an error on their credit report. That's over 40 million people with incorrect information affecting their financial lives. These aren't minor mistakes. They're incorrect late payments, accounts that don't belong to you, debts already paid marked as delinquent, even entire identities mixed with someone else's file. A 2021 Consumer Reports investigation found errors that could meaningfully hurt credit scores in 34% of participants. These errors cost real money. Higher interest rates, denied loans, rejected rental applications, lost job opportunities. A study estimated that credit report errors cost consumers $3 to $4 billion annually in higher interest rates alone. How do these errors happen? Credit bureaus rely on furnishers, banks, creditors, collection agencies to report accurate information. But there's no verification process. If a creditor reports you're 90 days late when you're not, that information goes straight onto your report. The burden of proof falls on you to prove the error, not on the bureau to verify accuracy. Discovered an error? Good luck fixing it. The dispute process is deliberately designed to be difficult, time-consuming, and often ineffective. You submit a dispute online or by mail. The credit bureau, the same company that published the error, investigates by asking the company that reported the error if the error is real. Predictably, creditors often verify incorrect information because fixing it requires effort they're not incentivized to make. This investigation typically takes 30 days, during which the error continues damaging your score. Even when you provide documentation proving the error, bank statements, payment confirmations, legal documents, credit bureaus often reject disputes as frivolous or side with creditors over consumers. Consumers have sued credit bureaus thousands of times for failing to correct errors. While some win, most can't afford legal battles against corporations with armies of lawyers. The system is designed to favor creditors and bureaus over consumers. In 2017, Equifax suffered a massive data breach exposing sensitive information of 147 million Americans, nearly half the U.S. population. Hackers accessed names, social security numbers, birth dates, addresses, and credit card numbers. This wasn't a sophisticated attack. Equifax failed to patch a known security vulnerability for months. The breach exposed the fundamental problem. You're not Equifax's customer, you're their product. They had no incentive to invest in security protecting your data, because you can't take your business elsewhere. The credit bureau cartel means you can't opt out. Your data exists in their systems, whether you want it there or not. What happened to Equifax? They paid a $700 million settlement, pocket change for a company generating billions annually, and continued operating as before. No executives went to jail. The company still controls your financial life. Victims received maybe $125 each, if they were lucky enough to file claims in time. Meanwhile, Equifax's stock price recovered within months. Credit scoring disproportionately harms the poor and minorities, not through explicit discrimination, but through proxy factors that correlate with race and class. Zip code, employment history, types of credit. These factors affect scores while correlating strongly with socioeconomic status. People with less money get worse credit scores, which leads to higher interest rates, which costs more money, making it harder to build wealth and improve scores. It's a vicious cycle. A poor person paying 25% interest on a credit card while struggling with bills will have worse credit than a wealthy person paying 15% on the same balance paid easily from disposable income. Credit scores also punish people for avoiding debt. No credit history means low scores. Immigrants, young people, and those who lived cash-only lifestyles get penalized for not participating in the credit system. You're punished for financial prudence while rewarded for borrowing money you may not need. Most developed countries don't use credit scoring systems like America's. In Germany, Schufa operates differently with more consumer control and transparency. Many European countries have data protection laws preventing the kind of unchecked data collection U.S. credit bureaus practice. China's social credit system gets criticized globally. Yet America's credit system functions similarly, just operated by corporations instead of government. Both systems track behavior, assign scores that determine opportunities, and operate with limited transparency or appeal. The difference is Americans assume our system is fair because it's corporate rather than governmental. But a monopoly controlled by three unaccountable corporations might be worse than a government system subject to democratic oversight and constitutional protections. Check your credit reports annually from all three bureaus at annualcreditreport.com, the only legitimately free source mandated by law. Document everything. Dispute errors in writing with detailed evidence. If disputes are rejected, file complaints with the Consumer Financial Protection Bureau. Understand what actually affects your score. Pay bills on time always. Keep credit utilization below 30%. Maintain old accounts even if unused. Limit new credit applications. The system is rigged, but you can navigate it by understanding the rules. Consider freezing your credit when not actively applying for loans. This prevents identity theft and unauthorized credit checks. It's free and only takes minutes to temporarily unfreeze when needed. Support credit reform legislation. Laws requiring credit bureaus to verify information before publishing, imposing penalties for errors, and giving consumers more control would fundamentally change the power dynamic. Credit scores aren't about financial responsibility. They're about profitability. You're judged not by whether you can afford something, but by how much profit lenders can extract from you. The system rewards people who carry balances and pay interest while punishing those who avoid debt entirely. Three private companies control this system with zero democratic accountability, minimal regulation, and consistent failure to protect the data they collect without permission. They profit whether their information is accurate or not. They face trivial consequences for massive breaches. They operate a monopoly you can't escape. Your credit score determines if you can buy a house, where you can live, what job you can get, how much you pay for insurance, even whether you can turn on utilities. Yet, the system generating that score is fundamentally broken, biased, and designed to serve creditors and bureaus rather than consumers. If this video exposed how three corporations control your financial future, like and subscribe for more investigations into systems that profit from your powerlessness. See you next time.